I'm Tim Humphreys, head of the Global Essential Infrastructure. I've been investing for over 27 years in both London and Sydney. The portfolio is a portfolio of about 35 essential infrastructure companies, a very large average market capitalization of around about 35 billion US dollars. And the dividend yield is around about 3.5%, which we think is quite attractive given the growth opportunities that the portfolio faces. So at the moment, we've got over 70% of the portfolio focused on North America across both the US and Canada. We have about 15% within Europe and then the rest in the developed markets of Asia, particularly Australia. We like companies that are regulated, so things like electric, gas, water utilities, and also companies that have long-term contracts or concessions, so things like toll roads, airports, and also some of the mobile phone companies. These deliver the best inflation protection. They have the most stable and predictable cash flow. And when you put them together within a portfolio, we think these are going to deliver very attractive returns with lower volatility and also an attractive income component as well. So 2024 really was a year of two halves. At the beginning of the year, we saw a continuation of what we'd seen. So things like mobile phone towers and utilities struggled in the first half of the year. Then in the middle of the year, we saw the Fed cut interest rates for the first time. And we saw the market wake up to the electrification of things and the opportunities there across the utility and also the energy infrastructure space. On top of that, we saw AI and data centers really capture the imagination of the market, and people understood that these assets require huge amounts of electricity to power them. So that really spurred on the utilities across the regulated space, across the transmission space, particularly the gas pipelines that are going to pump gas to the power stations and fuel the data centers and the AI push. We're very optimistic about the prospects for global essential infrastructure for 2025. Valuations are looking pretty supportive. We've also got President Trump in the White House, which is supportive for growth within the US and also some of the energy infrastructure complex as well. On the negative side, we do have a couple of areas of concern, such as renewable energy, particularly in North America, where President Trump has stated his obvious opposition to. So particularly within the regulated utility space, we like names such as Public Service Enterprise Group that has a great combination of a regulated utility, but also some exposure to the AI thematic. We also like NiSource as well, which is another US utility. And then within the energy infrastructure space, we'd like names such as Targa, Williams, and also Cheniere as well feature quite prominently in the portfolio. If you have any more questions, please feel free to reach out or look at the website for more information.